What is the one asset, the one thing that impacts all of us? It doesn't matter who you are, it impacts all of us all across the country. Real estate. Today's episode, we're going to talk all things real estate from an investment perspective. A lot of different ways to invest, but we have to do it like the smart money does it. What are the smart money moves when we invest in real estate? Real estate is all over the news right now. It's unaffordable. It's hard to get loans. Interest rates are through the roof. We think about it from, having a home we own or we lease. We think about it from an investment property. Maybe it's a VRBO or an Airbnb. We think about it from the standpoint of, do we want to own it as a part of our investment portfolio, or do we just want a second home down by the lake? Real estate is so important to us, not just from a wealth creation perspective, but also from what it provides us. Let's break down the three basic ways that we can invest in real estate today. Now, I know this is an exhaustive list and there are all kinds of other ways to invest in real estate, but for today's purposes, let's keep it brief, bright, and then we'll be done. Real estate can be a really great diversifier to our overall portfolios. It's not just stocks, bonds, and cash. We can look at some of the biggest pension funds, and we can look at endowments, and over time they've had large exposures to different types of real estate. I've been investing in real estate for about the last 20 years, and I can tell you there are some really wonderful advantages to real estate, but there's also a lot of risk. There's three smart ways to incorporate real estate into your portfolio if it's appropriate for you. Number one, we could own the physical asset. For many of us, we have this idea in our head of maybe owning one or two rental homes, long-term rentals, 1 or 2 year leases with rent escalation clauses. And there's a lot of advantages to that. As a matter of fact, I would suggest that kind of real estate investing has some of the best tax advantages when you own the physical asset. Now, you could own things like commercial buildings, apartments and condos, townhomes. You could own Airbnbs and VRBOs and beach property and mountain cabins. There's all kinds of physical assets that you could own. But here's the reality. If you own one piece of real estate, as good as those tax advantages are and the ability for maybe a great location to really appreciate in value, the one potential challenge you might face is the location risk or the risk to that particular asset. Well, what do you mean, Nick? Well, roofs need to be repaired. Plumbing has to be changed out sometimes. How's the electricity? You've got to think beyond just the return in the tenant. There's so much to it. And if you're retired or you are a pre-retiree, and you're looking at creating more efficiencies in your life and simplifying your life, owning a single piece of real estate might not be a great idea for you. Well, do you want the landlord risk? Do you want the phone call at 3 a.m. because a light bulb needs to be changed or the smoke detector's going off? Do you want to be on a cruise going around the world and you get a notification that the garage door broke? Well, probably not. So then you hire a property manager, and now they're managing the property for 15, 20, 30% cut of your revenue. You're collecting $1,000 a month, and now $300 is going to the management company that's going to handle the 3 a.m. phone calls. Maybe it's still worth it to you. Some people are going to rethink, is that cost worth it? Am I still going to net the profit I want, net of the tax savings, that it was a smart play for me? Owning physical asset real estate could be a really smart play. I've been investing since 2005. I've seen it go well and not, but at the end of the day, over a long period of time, it's worked out well for me. But that's not the only way to get great tax advantages and also participate in real estate as a part of our portfolio and our investment strategy. The second way we could invest in real estate is non-traded REITs, real estate investment trusts. This is pooled money that comes together that goes out and invests in maybe $1 billion to $5 billion worth of real estate. It could be tens of properties or it could be hundreds of properties. It could be diversified and own everything from grocery anchored retail to it could own headquarter buildings. It could own strip malls. It could own all kinds of different things. The local Walgreens down the street. You could diversify in one single piece of real estate, hundreds of properties, and they manage it for you. Now, that's going to dilute some of the return, but that also slightly dilutes some of the tax advantages. Now, non-traded real estate could also allow for us to really hone in. As an example, let's say I want to hone in and invest in college towns. I want to own condos. I want to own townhomes. I want to own homes that are undervalued or hotels undervalued in the Midwest. Let's say I want to own the operations of data centers. There's a lot of different ways to invest here, but here's the challenge. You do have to be okay with illiquidity. Just like owning the physical asset of a single-family home, non-traded REITs are not very liquid. So once we invest, we have to understand that we're committing for a period of time, and it's not something we could just cash out tomorrow. Now, one of the advantages of a REIT, again, real estate investment trust, is that in order for a company to structure as a REIT, they have to pay out approximately 90% of the revenue and those benefits to you as the investor. Well, why would they do that? Well, that's one way to avoid corporate taxation. Now, there's more to it than that, but we'll leave it there. These types of REITs also allow for us to be able to avoid landlord risk. I don't want the phone calls at 3 a.m. I don't think you do either. The third way we could invest in real estate is on the traded market through things like ETFs, exchange-traded funds, and mutual funds that focus in on REITs. Now, they could be REIT structures and traded, or they could be indexes of real estate investments. They could own real estate investment companies. There's a lot of ways to own real estate on the traded market. Many times on the traded market, we also see an increase in dividends, so dividends being paid out from these REIT structures on the market. Now, if you are in retirement and you're considering cash flow, all three of these ways could produce really excellent retirement income. But with traded REITs, what I really like is that we can have the exposure to the real estate market as an asset class and still maintain liquidity. I love liquidity in retirement. And I think it's something that is so misunderstood and underappreciated. If you're like me, and you can appreciate real estate exposure, but you also value liquidity, then we have to look at the real estate market on the stock exchanges. The last thing I really like about traded real estate on the markets is they tend to be less expensive than what I might encounter in non-traded REITs or owning a physical piece of real estate. I like keeping my costs low. That's one of the easiest ways to enter the real estate market as a part of your portfolio. We can keep costs down and we can stay liquid. Now, none of this should be construed as investment advice. This is for education only. However, I do want to encourage you, if you're curious about investing in real estate, or you currently own real estate and you're looking to make the next smart real estate move, reach out to us. Our email's in the description below. We'd be happy to answer your questions or help point you in the right direction. Real estate can be an awesome part of somebody's portfolio if positioned well and you understand the risks. There's a lot of great opportunities and a lot of money to be made in the real estate market. Even today, you have to understand what goes up must come down and what goes down must go up. Right now, there's a lot of areas in our country where the real estate market is down. Perhaps it's time to take advantage of that. Thanks for joining us today, and thanks for staying coachable.
Investment advice offered through Merit Financial Group, LLC, a registered investment advisor.